In this lecture, we will look at using moving averages to trade cryptocurrency. Moving averages are one of the most popular overlays used by traders. They are represented by a line which shows the average price data over a certain period of time. The number beside the moving average MA symbol on the chart shows the amount of days calculated into the moving average. For example, the 200 MA would be the moving average for the past 200 days. Moving averages are also known as the trader's best friend and can be great with helping you to identify when a trend has begun or ended. They are among the most popular indicators that are used for technical analysis. The two lines applied to this candlestick chart are the 200-day and the 50-day moving averages. They represent the price average from the past 50 days and the past 200 days. Applying these lines together on the candlestick chart can provide great insight into the price action and movement of a cryptocurrency. The shorter the time period that is selected for the moving average, the more signals the line will generate. A great trading strategy to use with moving averages is called the moving average crossover strategy. When an X is formed after the 50-day moving average passes the 200-day moving average to the upside, this is called a golden cross. A golden cross is a bullish sign which tells us that the price is likely to continue upward. When an X is formed after the 50-day moving average crosses the 200-day moving average to the downside, this is called a death cross. When a death cross occurs, you can expect the price to fall and move into a downtrend. If you wanted to do short-term trading, you could simply change the moving averages to the 50 and 20-day moving average or even the 8 and 13-day moving average instead of the 250-day. Moving averages not only provides insight into trend direction, but can also serve as support and resistance levels, which we will discuss in an upcoming lecture. There are actually several types of moving averages that you could use. Most people just use simple moving averages, but others such as exponential moving averages are available as well. Exponential moving averages are calculated similarly to simple moving averages, but gives more weight to the more recent time period. This actually provides more accurate data and responds faster than simple moving averages. So let's head over to Bitcoin Wisdom and take a look at moving averages for the current Bitcoin candlestick chart. Let's select the Bitstamp Bitcoin USD chart here, and here's our Bitcoin daily candlestick chart. Both of the lines that are already on our chart are our moving averages. If you hover over the settings drop-down menu, you can see multiple different options you can use for your chart. If you wanted to change over to exponential moving averages, simply go to the main indicator tab and select EMA. But for now, let's just stick with simple moving averages. So let's zoom in a bit so we can get a clearer picture of our candlestick chart and our moving averages. The more volatile the line, the shorter the time period. So this line here would be our 50-day moving average. You can see that it follows the candlestick pattern much more closely. The line below this is our 200-day moving average, and it moves a lot slower than the 50-day. So let's take a look at how we would use moving averages to trade our cryptocurrency. One of the easiest strategies to learn and use is the moving average crossover strategy. So here you can see the 50-day moving average cross the 200-day moving average to the upside, which forms a golden cross. This is a bullish sign and can be used as a great entry point. But on the flip side, when the 50-day moving average crosses the 200-day moving average to the downside, this forms a death cross. We've been in a downtrend for about the past 2 months, but we actually just hit another golden cross, which means it's probably a good time to enter. Using the moving average crossover strategy is a great way to make smart trades. If you look at our chart here, you can see that the 50-day moving average could also be used as a strong support or resistance indicator. When the price is above the 50-day moving average, you can see that it provided a really strong support. But once it broke below the 50-day moving average, it had a hard time breaking back through the resistance. But we've just golden crossed again, and the 50-day moving average is now providing a really strong support again. Using moving averages is a reliable strategy, and if you didn't know any other indicators except for moving averages, you could still be successful at trading. I'll see you in the next video.